Hello, good morning. You're watching Buy Now, Sell Now on ET Now with me, Vinny Motiwala, along with me, Cheryl D'Souza as well. Cheryl, a very good morning to you as well, but seems like a bit of a Monday blue, at least for the D Street.
Absolutely, a very good morning to you, Vinny. And also, yes, it's Monday blues coming in for D Street. We are sharply off the day's highest point. And not only for the benchmark indices, take a look at what the broader markets are doing. That's where the cut is pretty sharp. Be the mid cap index or the small cap index. There you go again, 2.5% downtick coming in for the small cap index. Even mid cap index is trading lower by about 1.5% as we speak. Some of the names that are actually declining in trade. One would be NHPC. You also have New India Assurance. You have GICRE. All of them are slipping in trade. NHPC down about 9.5% or so. As we speak, take a look at what Anupam Rasayan is doing, because they came out with their numbers a short while ago and the PAT was pretty low when you compare it on a year-on-year basis. So Anupam Rasayan also taking a knock in today's trading session on back of those earnings at the day's lowest point. That is Anupam Rasayan. But a lot of individual stocks actually moving on back of their earnings, Vinny, given the fact that we are in the fag end of the earnings season now. Let's take a look at the list of gainers and losers on the Nifty. One of the most key important point to note is that the advanced decline ratio is totally tilted in the favor of the negative. So if you look at the advanced decline ratio or advanced decline when it comes to the NSE, it is you have 1,867 declines as against the gains of about 430. So that's your advanced decline ratio. As you can see, pretty much skewed on the losing end of the market. Talking about the list of gainers, then you have Apollo Hospitals. That's the top gainer on the Nifty, 3% uptick for Apollo Hospitals. Wipro, DVs, Dr. Reddy's are the other set of gainers, while on the flip side, Hero MotoCorp actually seeing a sharp cut, about 4.5% on back of their earnings. You have BPCS that's down 4%. Coal India, ONGC, NTPC, all of them are declined. So suffice to say that the PSU counters are taking it a bit easy in trade today. 3% downtick coming in for Nifty PSE index. So you can see that reaction on the screen with most of the counters. And IT index and pharma index are the ones that are gaining in trade. So defensives are leading the gains. But yes, you have PSUs and broader markets seeing sharp cuts in trade today, Vinny.
Absolutely, but let's move on and bring on board the management of Starcraft. They reported their Q3 numbers as well. And when you're looking at it, revenue saw a growth of 11%, but profits, that's seen a decline of almost 13% as well. Now, what is impacting the company? What is the outlook going forward? Let's bring on board Mr. Rajendra Gandhi, MD at Starcraft. Thank you so much, Mr. Gandhi, for joining in with us this morning on ET Now. And, when we are looking at your numbers, seems like overall the numbers are impacted due to the delay that we saw in the festive season. So now, how are the demand trends shaping up in Q4, and what is the client confidence that you are looking at? What is the traction in that terms?
Yeah, we continue to see reasonable demand. There's not a high growth, high demand period, but we are seeing that there is a normal demand during this period, what generally is. Of course, the fourth quarter is a little softer than the third quarter because the festival seasons are over. But compared to the quarters, compared to the fourth quarter, we are seeing a normal demand.
Right. Good morning, Mr. Gandhi. This is Cheryl also joining in the conversation. And if you look at the company, also mentioned that a wallet is a major concern for the premium and the discretionary consumption space. Any pricing pressure issues that you are witnessing right now, and also what kind of price cuts are you expecting to take going ahead, if that's on your mind then?
No, we are actually rightly poised there. We are catering to that value segment, and we deliver the right value to our consumers, the segment that we are targeting. And we believe that because there is a pressure on the wallet, we are actually seeing that more and more people would want to buy our products because this fits in well for them.
Okay, let's move on and talk about your volume growth. Double-digit volume growth is what we're seeing across the products, except in the LED segment. Now, what is the expectation in terms of segment volume growth that is expected? Could we expect it to be higher in the next couple of quarters? What is the outlook?
On the volume side, we are growing well. The value side, of course, being a cost-plus company, there has been an advantage on our cost. There has been either stable input cost position, or also there has been advantage in cost. While our gross margins have improved, we have also passed down those benefits. So overall, on the value front, there is not a great growth, but on volume front, we have a good double-digit growth in all the categories. Of course, the LED is degrowing for us.
Right, let's talk about your margins then. Sequentially, if you look at the margins, they've seen a downtick of about 240 basis points. If you could tell us what was the reason for this downtick coming in on your margins, and also on a consolidated basis, what sort of margin outlook are you actually envisaging going ahead for your company?
Our gross margins have substantially improved. We are able to get to 38% from a 33% gross margin similar period last year. 4 to 5% improvement on our gross margins. There has been both a increase in our people cost, the manpower cost, and also we have been introducing new products, particularly during the quarter and in this year. Then so our marketing spends have been in a little excess of a similar period last year. So these two have contributed along with increased depreciation. So we are seeing a lower at the margin end, but the gross margin has substantially improved. We are currently at around 9% on gross margin on the EBITDA for the 9-month period, or a little lower for this quarter. So we believe that this year we will continue at this level and will be able to end at a 9% EBITDA.
Okay, keeping an eye out on those EBITDA numbers over there. Thank you so much, Mr. Gandhi, for joining in with us this morning on ET Now. It's always a pleasure having you on the show. That was the management of Starcraft. As of now, seems like nothing has excited the street in terms of the numbers. Down almost 6% is what the stock is doing at the day's lowest point. But let's move on from one management to another. We have JK Lakshmi Cement, which reported its Q3 numbers. A decent and a good set of numbers actually that came in from the company. Look at the consolidated profit. That's our growth of 90%. Even in terms of EBITDA performance, operating performance, that's been quite strong as well. So yes, to talk more about their numbers now, we're joined by Arun Shukla, President and Director at JK Lakshmi Cement, joining in with us. Thank you so much, Mr. Shukla, for joining in with us this morning on ET Now. And surely a very good set of numbers, whether you look at it year-on-year basis or sequentially. But let's talk about realizations is what I want to start with, because cement prices, they've started seeing a decline since the month of November. Now, what channel checks are suggesting that cement companies may actually take a bit of a price hike as well. Is that something you would concur with? What's your view on this?
So thanks. Good morning. Yes, we had a very good set of numbers last quarter, and the kind of actions which we have taken in the last few quarters, that is getting realized now. We have done better than industry in terms of cost. We have done better in terms of improving our margin as well, right? As far as prices go, yes, I think prices have not been so impressive. If you compare prices last quarter over the preceding quarter, I think increase is about 1 to 2% only. Year on year basis also, this is almost flat. But what is helping cement industry to improve the margin is reduction in fuel and power costs. So on an average, reduction has been about more than 22%. We have done better than that. Our reduction is more than 25%. And similarly, I think raw material costs and other efficiency, actions which we have been driving, I think that is getting realized. So price front, yeah, advantage is coming out of the cost reduction only. Prices have not been improved, and I see this quarter also prices are going to be range bound. Maybe we are entering into demand month, so prices may go up little bit, but it's not going to be that steep increase in this quarter.
Right. Good morning, Mr. Shukla. There's Cheryl also joining in the conversation, and the management had actually, by the end of Q2, actually trimmed the volume growth guidance to about 12 to 15% or so, and this from 19% earlier for FY24. Are you on track to achieve this guidance that you all, the revised guidance that you all have set in? And also, if you could, I could add to that, if you could tell me about any volume guidance volume growth guidance you've penciled in for FY25. Given that the company is going to undertake very aggressive capex plans, isn't it?
Yeah. So, yeah, volume, I think we have trimmed down our forecast little bit. And the reason for that was that we had, some tool manufacturing arrangements, and we felt that that is not adding much value. So we thought of kind of, putting focus in our own, installations. So even if you take out that outsourced volume, our growth has been quite good. Our sales numbers are up by 8%, which is more than the industry. Last quarter, industry has grown by about 6%. We have grown by 8%. Even our top line also has grown by 9%. So we have done better. Yes, of course, I think we have trimmed it down because of the reason I told.
Right. You will be achieving
And
this
one thing
12.
I think I just wanted to mention during last my conversation with you, I had mentioned that we'll achieve that 1,000 rupees EBITDA per ton, and I mentioned that we are going to achieve this soon. So I think that soon has come. We have achieved more than 1,000 rupees EBITDA per ton last month, and that is what the first milestone which we have been trying for the last few quarters, and now our endeavor and the focus is to kind of improve from here.
Was my next question. So you will be seeing an improvement in terms of EBITDA per ton as well. Already achieved that 1,000 per ton mark, which you've said. And also just a confirmation, sir. So this 12 to 15% guidance is what you will achieve in FY24, right?
Yeah.
Okay, and so then moving on, then you've also approved approved a fundraise of 2,500 crores, and one of the objectives is to stated is that inorganic growth is something that you will be looking at. Anything concrete so far that you're seeing in terms of an opportunity coming in on the inorganic growth front, and what are the acquisitions on the anvil now?
So right now our focus is on organic growth only, and that is why we have announced a capex of 2,500 crore. We are going to add 4.6 million ton capacity in phases. First phase is going to be about half of it, about 2.5 million ton. Second phase is 2.1 million ton. That is what our plan is. As I told before, that our plan is to reach to 30 million ton by 2030. We are well on track with this 4.6 million ton and other internal improvisation will be about 22 23 million ton maybe in the next 2 to 3 years time. And with other mine license which we have got in north and western part of India, where we have already started working on acquiring land and getting all those clearances. And if that come in place, then we are well on track of achieving 30 million ton. So right now focus is on organic growth only. We are not looking at inorganic opportunity, but yes, if something comes up which is very impressive and that is also kind of complement our strategy, then definitely we'll look at that as well.
All right, then we leave it there. Mr. Shukla, thank you so much for joining us on ET Now to talk about the earnings gone by for your company, as well as you're sounding pretty optimistic for the year, for the FY25 as well as for Q4. So all the best for that. That was the management of JK Lakshmi Cement talking about the quarter gone by and what they are expecting going ahead, saying that the focus right now will be definitely on organic growth. Vinny.
Absolutely, but on that note, let's just slip into a very short break. But viewers, don't go anywhere, because after the break, we will be taking all your stock related queries and our experts will be joining in with us as well. So don't go anywhere, send us your stock related queries by then.
Welcome back. You're watching Buy Now, Sell Now on ET Now, a show where we get you answers for all of your stock-related queries. Remember, viewers, you can connect to us on the number that's flashing on your screen. But let's bring on board our experts for today. We have Kunal Bothra as well as Ashish Maheshwari joining us on the show. Very good morning to you, Ashish, as well as Kunal. Thank you so much for joining us on ET Now. And Ashish, the first query is actually coming your way, all the way from Japan. This one is from Sunny. He's written to us after a while, actually, and he's a long-term investor. He's holding Balaji Amines as well as Navin Fluorine, and he's sitting at a break even in both of these counters. Now what he wants to do is sell one and consolidate it, the remaining in the other stock. So he wants to know fundamentally, out of Balaji Amines as well as Navin Fluorine, which one do you think is stronger in terms of long-term investment for him?
As far as Navin Fluorine is concerned, the stock is at 52-week, near to the 52-week low level. So we have seen very big correction in the stock from almost 5,000 rupees. Stock has come down to 3,060 level. So this is the weakest, if you ask me, weaker in fact out of these two. So Navin Fluorine is a sale, and instead of this, you can buy some other stock which can give you better return. So maybe Electra Green Tech can be a better play where you can buy at 2009 levels and can expect around 3,000 rupees in next 1 year. Balaji Ameen is a stock which still I'll advise to remain invested because this is still a stronger company and in last few months has consolidated and may give good returns further. So Balaji Ameen is old.
In case Ashish, he wants to exit out of Naveen Fluorine and put that money in Balaji MIs, that will also be fine?
Yeah, that will be also fine.
Okay, Kunal, this next query is from Sumantra Chatterjee from Delhi, and they want to know on IRFC. They've bought 200 shares at a price of 100 rupees per share, and this was in December 2023. What's the view on this one for the next 1 year? Is the max holding time that they have? What would you suggest?
See, for the next 1 year, I would believe that the stock should be a lot more sideways. There could be a strong possibility that this correction may take the stock much lower than the current levels of 145 where it's trading right now. I believe that the 50 DMA, for example, is at 120 or less than 120 for IRFC. And ideally in these kind of scenarios, a stock generally retests its 50-day moving average and falls by a margin of say another 5% to 10% depending on the degree of correction for the stock. So net, I would believe 110-15 levels to be retested for IRFC, if not soon, maybe over the next few months. If you're looking to buy or average further, then I think that could be a good point to average for IRFC. I think that could be a better strategy for the stock.
All right, this one is coming from Najib. He's writing to us from Qatar. This one's for you, Kunal. He wants to know about CG Power, 500 shares at a price of 478, as well as Devyani International at a price of around 183 rupees per share. He's saying both of these counters are not showing any positive signs with their up move. He wants to know whether he should stay put with them for a year or look to sell or average out. What sort of a strategy for both of these counters?
See, the good part about the CG Power specifically is that the stock has been a lot more sideways. So the beta of the stock has dropped down significantly, even though the stock has done exceptionally well. I think in the last 3 years, 2020 low, the CG Power was almost at 4-5 rupees, and the stock, very recently touched a high of I think 485 to 500 approximately, which means a 100x return for the stock. It's been a lot more sideways in the last 2-3 months, but I would believe that the stock may continue to remain sideways for the next 3 odd months. So it depends on how long you would want to hold on to the stock, and if you are looking to do an averaging strategy, then only it makes sense to hold on to a stock. But because of the low beta nature of the stock price, I would believe that the stock should be a lot more sideways. Devyani, on the other hand, the stock has been a lot more volatile. It's fallen sharply. It's broken the major support of 180, now come back towards 150 mark. So technically 150 could probably be a good point where maybe the stock could stabilize, but I'm not sure how soon can the stock make a comeback and retest the 200 DMAs as well as the 180 mark and then scale past about those levels. So you can hold on, but I think above 180 only is where you should look to add Devyani.
Okay, Ashish, this next query is for you. This one is from V. Ravichandran from Chennai. They want to know on Ruby Mills for the long term. Would you suggest that they could buy this stock for the long term? Or if not this one, any other stock in this industry would be something that you would suggest?
So Ruby Mill is again a small cap kind of a stock with almost 750, 760 crore market cap. But if we see in last few months from the stock has gone up from almost 140 rupees to almost 270 rupees, and now it is consolidating for some time. So if investors bullish on this real estate fact, then I think you can continue to remain invested because we have seen improvement quarter to quarter working also from 8 crore. They did 11 crore PAT in September to December quarter. And gradual improvement is there in the top line also. So my suggestion will be to wait till 270 to 80 levels before exiting. And once you exit this stock, I'll suggest two options. One is Uptown Limited that you can enter. At the same time, in large cap, DLF also looks good after the correction.
Right. This next one is coming in from Korean Matthew. He's writing to us from Muscat, Kunal. He wants to know at what price can he look to buy Nestle India for the long term?
So Nestle, I think, has gone through a correction in the last 2 months or 1.5 odd months specifically from the December highs when the stock was at 2700 50-60 mark towards the current levels of 2457. Now the concern for Nestle is that the selling which is happening is also on the back of slight higher volumes. which means that the stock should see one more round of correction. So there could be an intermittent rally in between, but then eventually I think the stock could probably bottom out after retesting its 200-day moving average. So if you're looking to buy, I'm not sure of the time frame when the stock would retest its 200 DMA, but I think closer to 2,300 and slightly below could be a zone where you can look to add further.
Okay, on that note, let's just slip into a very short break. Viewers, don't go anywhere. We'll be back with all your stock-related queries after the break. Welcome back, and you're watching Buy Now Sell Now on ET. Now let's keep it going with all your stock-related queries. Then, Kunal, this one is coming your way, and this one is from Rajesh Maheshwari from Singapore. They want to know on REC and HPCL whether it is a good time to enter these stocks now for the short to medium term, and also Som Distilleries, they're already holding it at 320 rupees per share. So what should they be doing with that also for the short term?
So Som has been an interesting stock because the stock has shown just consistent weakness from the time there was a negative news flow for the stock. I think if I'm not wrong, there was a news flow around the month of October, November for the stock where it fell from 350 to I think 300 quickly, and now it's just gone through an inertia sell-off. So no major signs of bottom formation as of now, but then I think we'll have to wait out for a point when this phase of correction ends for the stock, and if the volume starts to recover, increase, and the prices also get into a range, that could be a time where we may probably expect bottom formation to happen. As of now, it's more of a downward trend which is continuing for some distilleries. But on the other hand, I think REC, PFC, and the other stocks which you mentioned, I think these stocks have just started a phase of correction. But my sense is that one probably would have to wait out for a point when these stocks correct by at least a margin of 15% to 20-25% at least from their swing highs. I think that could be a very good starting point for someone who's missed out. But you also have to remember that even if these stocks correct by a margin of 15-20%, it's not that these stocks will find an immediate bottom. These stocks could be extremely volatile, and you will have to be a lot more patient into trying to capture the next uptrend for these stocks. So if you're looking to enter, at least a 15 to 20-25% correction could be a good starting point for many of these names.
All right, this was come from V. Murali. He was writing to us from Bangalore. And Kunal, though he's asked these questions to a fundamental analyst, his time horizon is just 9 to 12 months. So I'll take these queries to you. One is whether he wants to know whether he can buy Kajaria Ceramics at current price for a period of 9 to 12 months. As well, also from a 1 year point of view, is Keval Kiran Clothing versus Monte Carlo? Which one do you think is better for a 1 year time horizon?
So, frankly speaking, none of them, Keval Kiran as well as Monte Carlo, none of them, neither of the two, they look attractive on the charts. Both of them are going through their phase of downtrend. No major signs of bottom formation for these stocks because of the way these stocks have just been a slow, gradual and consistent underperformer as such. So the trends still look very weak for these stocks. Now for Kajaria Ceramics, even though the stock has sold off in the last 10-15 days, I think 1400 from 1400 to now sub or just on the verge of breaking the 1200 mark. It's just that the volumes on this phase of correction has been very low, which means that the stock should very quickly find a bottom for itself. So I think 1200 could be a good starting point, and maybe with a margin of another 50 rupees on the downside, you can look to add further for the stock.
Okay, Ashish, this next query is from Satya, and they want to know on for a medium term, Century Plywood, GSFC, anything looking attractive on that front, or should they be entering this strong for the medium term?
Yeah, Century Plywood again a good stock in mid-cap space, and if we see last 1 year time frame and somebody rewarded investor from 450 levels to almost 850 it has touched. And post consolidation, I think there's a lot of merit in the stock. I'll surely advise to buy this stock at 700 to 720 level. As far as GSFC is concerned, right now as all PSUs the stocks are under the hammer and a lot of profit taking is happening. So I'll wait for GSFC at least, but Century Ply looks better to me at this price point.
One is for you, Ashish. This one's coming from Rajesh Kakkad, and he wants to know the reason for Biocon fall despite good results. He has 600 shares of Biocon at a price of 289 rupees per share. Should he hold on to this one or look to exit? He's actually betting on Biocon for the long term.
So if we see Biocon performance, in fact, This stock has moved in very narrow range from 200 rupees to 300 rupees. And post result, there's some consolidation which is happening. I'm not saying this is a stock which can give you a very good return future. Instead of this, actually, I like to go with a stock like Dr. Reddy or Sun Pharma, which can give you a much better return. Because even in the best of the rallies, this stock has not delivered. So I'm not too optimistic as far as Biocon is concerned. That is why it's a sale in my view.
Kunal, this next query is from Supratim Chakravarti, and this one is on Z Entertainment. They have 175 shares of Z at a price of 151 rupees per share. What should they do? Buy, sell, hold?
Well, it's a tough one because the stock is plagued with a lot of news flow. Now, if the news flow turns out to be positive, then we will probably expect the stock to get into a recovery phase. But right now, it's been just dilly-dallying between this 100-point range, 270 on the upside. I think 155 or 165 was the previous or the very recent swing low for Z Entertainment. So this 100-point range is where the stock is trading right now. The other concern for the stock on an immediate or a short-term perspective is the stock which continues to come into FNO ban every now and then. So whenever it comes into FNO ban, we've seen the stock trends halting almost on an immediate basis and the stock going through a correction. So that is also one of the other concerns for the stock. But since you've bought at significantly lower levels, you can continue to hold on. The only concern, as I said, is the news flow surrounding the stock price. If it turns out to be positive, then maybe the stock can also start to show fresh signs of long-term trend for itself.
Kunal, another one coming your way from Subramanian from Chennai. He has PSU counters in his portfolio, not PSU banks, but other PSU counters in his portfolio, and he's sitting on a good profit, approximately 40 to 60%. Now he wants to know, should he book part profits or continue to hold on to these counters for the short to medium term? What advice would you give him?
No, frankly, in fact, last couple of days we've been advising many viewers as well as investors to try and book out profits on the PSU names because of the divergence and the huge divergence for these stocks from their long-term moving averages. So the PSE index, for example, is currently at 8,900 approximately. The 200 DMA for the index is at 6,000, which means a divergence of more than 50% to 55% odd for the PSE index from the long-term moving average, and that's an extreme kind of a divergence for an index to sustain. So I would believe that there could be a stronger possibility that we may see a lot more phases of correction for these PSU stocks. Depends on the kind of quality of stocks which you have. If those are extremely high beta pockets, then you can book out profits, look to buy back if these stocks correct, as I said earlier, by a margin of 25% at least from their swing highs.
Ashish, this next query is from Pradeep from Kolkata, and this one is on a couple of stocks. One is India Pesticides. They're holding 50 shares at a price of 232 rupees. Other one is they're holding 30 shares of Styrenix, which they bought at 1,092 rupees. Currently, that stock is trading at 1,500. What's your long-term view on both these stocks?
See, I only cover IPL, so I like to give my view on IPL as well. So IPL is again a stock which has doubled in last 1 year, and almost a debt-free company consistently delivering very good numbers. And the sector looks good because the way government focuses there on agri space, at least companies like more inbound fertilizer and chemicals companies will continue to do well. So I'm also envisaging a lot of money will shift from U companies, underperforming companies from UPL, etc., to companies like PI Industries or India Pesticides. So it's a hold in my view. My target for this stock will be 450 in the next 6 months.
All right. This one is coming from Vishwanathan Nair, and he wants to know, Kunal, out of 3 stocks that he's mentioned, which one do you think makes sense for him to enter right now? One is Cochin Shipyard, the other one is Polyplex, and the last one is Fact.
So I think Cochin Shipyard is starting a phase of correction. I think the stock should correct towards at least a 750 mark, maybe another 5-7% lower from those levels could also be seen for the stock in this phase of correction. So I would probably suggest the buy on dips over here. Polyplex is something which doesn't look attractive. It's reeling below the 200-day moving average since the last, I think, 1.5 odd year. I remember covering the stock at 1200, 1300 mark prior also. And from there, the stock has been falling consistently. So even for this stock, the trend looks weak. Then the third stock which you mentioned was, which was the third stock which you mentioned, Sarah?
Fact.
Fact. So, Fact is a lot more volatile stock. Again, I would suggest a buy on dip. 760 is where the stock is trading right now. 900 was the previous swing high. My sense is that this phase of correction should take the stock sub 700. So, both for Cochin Shipyard as well as for Fact, you can look to buy these stocks if in case there is additional 10% correction from current levels.
Okay, let's move on to the next query, and this one is from Ajit from Muscat. And Ashish, this one is for you. IFCI, they're holding 1,000 shares at a price of ₹9, and Suzlon Energy, they're holding 6,000 shares at a price of ₹4. For the long term, should they continue to hold this? Obviously, they're making profits on both these stocks.
Yes, I think multi-bagger returns you have received in both these stocks. So, in my view, at least from IFCI, you should exit because the one way run up we have seen in IFCI, now the stock is also hitting down circuit. So, book profit there. Suzlon, anyway, is a long-term alternative or renewal story. So, this will continue to do well. So, hold is on Suzlon.
All right, this one is coming in from Mr. Anil Kumar Bhalla, who is a senior citizen, writing to us from Jalandhar. And this one is for you, Kunal. He has PNB, about 20,000 shares at a price of 52. NHPC also a lump sum shares at a price of 55. And NMDC, he's bought at a price of 122 rupees per share. He wants to know how should he garner the best out of these counters that he's invested in. He's saying he's a risk taker. Time is not an issue for him. But he wants to know for how long can he stay put with them, and are they good bets that he's taken?
See, I think they are phenomenal bets if you ask me from a long-term play. Now, but the only concern is, a cyclical move for these stocks, because after this last 6-month, 1-year uptrend, these stocks have gone into a huge overbought territory for themselves. So there's bound to be a phase of correction, consolidation. I'll give you an example. For example, in 2022, the PSU banking stocks, they had done exceptionally well. Many of these PSU banking stocks had doubled in the time span of, I think, 3 months to 4 months for themselves. What happened post that was almost a 6 to 9 months of consolidation for many of these stocks. There was a phase where many of these PSU banking stocks fell by a margin of 25% to 40% also. And then in the subsequent next 6 months or so, these stocks managed to surpass their previous swing highs by a margin of 40-50% higher from those levels. So you'll have to wait out for a point where these stocks may go through a short-term pain. But since you are, it looks like you are a long-term investor and you want to hold on to these stocks, I think these are good quality names which you should continue to hold on. Make use of the correction. In case of these stocks correct by a margin of 25-30% at least from their swing highs, good time for you to average out further.
Let's move on to the next one, and this is from Visakha from Kolkata, a long-term investor. They are holding Emphasis 30 shares, Ashish, at a price of 2,094 rupees, while Asian Paints 20 shares at a price of 2,913 rupees. Now, Emphasis has not performed as much as other peers of it, while Asian Paints is also not given that much of a return. So, what should they be doing with this? Continue to hold this, maybe book out profits, and maybe if they book out profits, should they look to buy something like an LIC?
So, in fact, we can't say Emphasis has not given good return. From 1,600 lows, the stock has touched almost 2,800 and is still quite stable. So, Emphasis is a hold in my view, because one thing we must understand now that as US markets are also at high, so tech companies will do much better in India also. So, stocks like Emphasis or your HCL Tech Mahindra or L&T Technologies, they are in our buying recommendation list. So Emphasis is again, now time has come that you will see stock crossing 3,000 rupees mark. So it's a hold in my view. As far as Asian Paint is concerned, yes, performance is not there. So if we want to buy some paint stock, I'll suggest to make an entry into Indigo Paints. This is a stock which can give you much better return compared to Asian Paints. Again, a mid-cap stock, but capturing the market share of Asian Paint, and stock is into bull trend also.
All right, on that note, active viewers, we slip into a break on this edition of Buy Now, Sell Now. When we come back, we'll continue taking your queries, as well as we'll have a management joining us, so don't go anywhere. Welcome back. You're watching Buy Now, Sell Now on ET Now, and we've come to the end of the queries, but we have the management of Pitti Engineering joining us. If you look at the numbers for the quarter gone by, a good set of numbers coming in for the PAT and the revenue. However, a mild dip coming in or other flat moves coming in for the margins, but as you can see it on your screen, 8% uptick coming in for profits on a year-on-year basis. Revenues higher by about 24% on a year-on-year basis. Let's bring on board the management of Pitti Engineering to understand what exactly contributed to that performance in the quarter gone by. We have Akshay S. Pitti, who is the Vice Chairman and Managing Director at Pitti Engineering, joining us on the show. A very good morning to you, Akshay. Thank you so much for joining us on ET Now. And if you look at your Q3 sales volume, they've come in at the highest level. If you could tell us what exactly contributed to those numbers, and will we see your company actually meeting its FY24 target of annual sales of around 42,000 metric ton for FY24?
Thank you for having me. If you see, for the 9 months ended, we have already achieved 30,800 tons of sales, which puts us on track for 42,000 tons for the current year. The growth of 15% for the current year is primarily driven by the bump in railway business from the domestic as well as export market, aided with new business coming in from the wind energy space.
Right. Akshay, good morning, and this is Vinny joining in the conversation. One, what is the target that you've set for FY25 also in terms of your annual sales target? And other than that, what's the status in terms of your Aurangabad plant expansion as well? What kind of incremental capacity are we expecting on that front and additional revenues?
For the next year, we are setting ourselves a target of 50,000 tons, which is about 20% higher than current year estimates. In Aurangabad, we are expanding our facility to achieve a target of 72,000 tons per annum, which should be operational by H2 FY25.
Right. And what about your order book? Because it's currently at around 900 crore rupees. If you could tell us the growth outlook and as well as demand trends that you're witnessing when it comes to both domestic as well as international segments, or when it comes to your orders.
Domestic segment is growing faster than the exports currently. We are estimating about 30% growth in domestic revenue and about 10 to 15% growth in the export revenue.
Right, and Akshay, right. Akshay, just one more thing that I want to know is by when can we see the merger of the foundry business with the company, and what kind of production targets that one could see on that front, as well as incremental revenue that are expecting from this as well?
In terms of incremental revenue, should add about 100 to 125 crores of top line. The merger should be completed by Q1 of FY25.
Okay, Akshay, thank you so much, for joining in with us this morning on ET Now, giving us an understanding in terms of the business as well as the outlook for the company going forward as well. So yes, that was the management of Pitti Engineering for you all on the back of their numbers. But with that, we're absolutely out of time on this edition of Buy Now, Sell Now on ET Now. It's a goodbye from Shreddar, myself, as well as the team who put the show together.